It's difficult to turn a corner these days without coming across predictions of an American recession. Big banks, prominent analysts, and former officials are all predicting a recession as the Federal Reserve struggles to keep inflation under control. Three-quarters of Fortune 500 CEOs anticipate negative growth before the end of 2023. Bond yields and consumer sentiment are both glowing red. Google searches for recession are at an all-time high. So, will we get another Great Depression? What will it look like? And will Americans be able to survive it? The Great Depression significantly impacted people's views, attitudes, and frugal habits during the 30s. Many of these Great Depression survivors hoarded money, became pack rats, and generally had difficulty parting with anything that might be useful in the future. Who could blame them? The Great Depression began in 1929 when equities on the New York Stock Exchange lost half their value in 10 weeks. As equities fell further in the early 1930s, businesses failed and unemployment skyrocketed. By 1932, 1 out of every 4 workers was out of employment. Banks failed, and many Americans lost their life savings, leaving them homeless. Thousands of Americans lost their houses because they had no employment and no money. The poor ones gathered in cardboard shacks on the outskirts of cities across the country. Hundreds of thousands of unemployed traveled the country on foot and in boxcars in hopeless search of work. Although few people were starving, hunger and malnutrition affected many. Many people in a country with enormous resources, the largest skilled workforce, and the most productive industry in the world couldn't comprehend why the Depression had happened and why it couldn't be overcome. Furthermore, many people couldn't comprehend why people should go hungry in a country with massive food surpluses. In the early 1930s, rumblings of discontent grew loudly, blaming Wall Street speculators, bankers, and the Hoover administration. Hunger marches and violent riots were frequent across the country by 1932. In June 1932, about 20,000 World War I veterans from throughout the country marched on the United States Capitol to demand that cash bonuses for their wartime service, which were slated to be paid in 1945, be paid sooner. The marchers, called the Bonus Expeditionary Force by organizers but generally known as the Bonus Army, spent several days in Washington, D.C., pressuring Congress to pay the bonus, but the bill was defeated. General Douglas MacArthur's troops and tanks separated the marchers and destroyed their improvised camps in the city on July 28. However, not all citizens were affected by the social upheavals. Many were too depressed or preoccupied with surviving day to day to participate in public displays of displeasure. Instead, they placed their hope and trust in the federal government, particularly after Franklin D. Roosevelt was elected president in 1932. Despite the fact that the Great Depression occurred over a century ago, many of the harsh lessons gained during the Dirty 30s can be applied to the current financial crisis. So, what are the options in the event of another Great Depression? Number 1. Follow practices to avoid debt. One of the reasons poverty was so rampant during the Great Depression was that many Americans took up installment loans and lines of credit with stores during the Roaring '20s. As a result, when the stock market plummeted and layoffs occurred, many borrowers were left with a mound of debt and no way to pay it off. Debt is still a huge issue today. People have been happy to postpone their credit card payments during the pandemic, but unless their interest is put on hold, they are merely digging deeper. To prevent repeating the Great Depression's blunders, attempt to pay off your debts as quickly as feasible. You may require the assistance of a debt consolidation loan in order to save money on interest, cut your monthly payments, and get out of debt faster. Number 2. Eat at home. Dining was off the menu for the majority of Americans in the 1930s. Almost every meal was made from scratch at home, and the recipes of the day were, to say the least, innovative. Traditional Depression-era foods include vinegar pie, dandelion salad, and something called Hoover stew, which comprised macaroni, hot dogs, and whatever else was lying about that looked delicious. While you may not be in such a difficult situation, cooking at home and eating up the food in your kitchen is a wise method to save money, especially if you use a cashback card to pay for your groceries. Number 3. Mortgage refinancing. When the Great Depression struck, many homeowners found themselves unable to make mortgage payments. President Franklin D. Roosevelt signed the Homeowners Refinancing Act of 1933 to prevent foreclosures, allowing Americans to change the terms of their loans and maintain their houses. Refinancing is still an effective way to reduce the cost of your mortgage. It might save you thousands of dollars in monthly payments each year. Mortgage rates are currently at one of their lowest points in history, so regardless of how the pandemic has affected you financially, you should consider refinancing. It's simple to check rates online, and even if your current mortgage is only a year old, you might save a lot of money. Number 4. Don't be afraid to relocate. As if the economic damage from the Great Depression wasn't awful enough, droughts and dust storms halted farming in the southern plains states during the 1930s. As a result, the Dust Bowl region experienced the biggest migration in U.S. history, with more than 2 million residents abandoning and migrating to wherever they could find work. Fortunately, getting work in a new location no longer entails hopping on a freight train and riding the rails from town to town. The best online job boards employ artificial intelligence to find suitable jobs around the country. Then, you can apply for many positions with just a few clicks. Number 5. DIY. DIY became the guiding principle during the Great Depression. If you desired something but couldn't afford to buy it, you could build it yourself. People created everything at home, from garments to cleaning supplies. To keep the kids entertained, they even made corn husk dolls. If you want to save money during the crisis, or simply avoid going to the store, there are a plethora of free guides online that will show you how to produce a variety of helpful household products. Number 6. Keep your expenses to a minimum. Many Americans saw the Roaring '20s economic growth as a justification to live beyond their means. People bought big-ticket items that they couldn't actually afford. They made a tiny down payment up front, then made monthly payments with interest moving ahead. It was like taking out a mortgage on everything. Needless to say, that was not a wise decision. To keep your head above water throughout the crisis, you must avoid making the same error. Maintain a budget for your monthly spending, and make every effort to make only necessary purchases with the money you have for the time being. Don't panic if you're not very good at keeping track of your spending. Free budgeting applications will perform your budgeting for you and notify you when you're about to go over your limit. Number 7. Odd jobs are better than no jobs. People embraced every job they could get during the Great Depression. Individual tasks, such as chopping wood or shoveling snow, are paid upon completion. One-time occupations are increasingly referred to as side gigs and are no longer limited to manual labor. Slick internet marketplaces are an excellent example, allowing you to advertise a wide range of talents, from copy editing to painting to voiceover work. You can also earn money quickly by enrolling in a rewards program that requires you to accomplish easy tasks such as watching videos and filling out questionnaires. It may not pay as much as full-time work, but like in the 1930s, every little bit helps. Number 8. Set up money for emergencies. The Great Depression, which followed the Roaring '20s, a time of widespread prosperity following World War I, sent a shockwave through the country that most Americans were entirely unprepared for. People who did not have adequate funds ended up bankrupt, unemployed, and in debt. One of the essential lessons to learn from the Great Depression is that anything may happen, and it's always a good idea to plan ahead of time. As the unemployment rate continues to rise, you may be concerned that you've passed up an opportunity. However, it is not too late to establish an emergency fund. The sooner you start putting money into a high-yield savings account, the more money you'll have when you need it the most. And number 9. Start saving today if you want to retire. There was no such thing as retirement for most individuals during the Great Depression. In 1930, more than 63% of males aged 65 to 74 were still working. When the market plummeted, people were left with no money to fall back on. Working until they were physically unable to do so was the only way they could afford the simplest necessities like food and shelter. If you want to avoid working well into your 70s, you should start saving for retirement as soon as possible. Even now, Social Security does not cover that much. Not sure where to begin? Speak with a professional finance planner who will assist you in developing a plan based on your current situation, whatever it may be.